In this video, we're going to review eToro. We're going to do it in a live environment. We've got some funds on account, so I'm going to take you through the platform. I'm going to tell you who they are, what they do, who they do it for, and we're going to tell you what we like about them and what we dislike about them. Stay tuned. Now, in the past, I've been very rude about eToro. I haven't liked the way they've gamified the trading industry and almost made it too easy for inexperienced investors to trade highly leveraged speculative products. But our times are changing. We're going to have a look in this review at whether or not eToro is still a trading platform or if they're becoming more of an investment platform as they're hoping to be. So who are eToro? Well, unless you've been living under a rock for the past 15 years, you probably know. But if you don't, they were founded in 2006, 2007 as a social trading network, primarily focusing on the forex markets. But since then, they've grown quite considerably. They've now got 20 million users across the world, and they offer indices, commodities, stocks, cryptocurrencies, ETFs, as well as some fairly interesting thematic funds. And we'll go into all of those on the platform. I'll walk you through how they work and what we like about them and what we don't like about them. Now, before we go on, we are doing this for YouTube, so please like, comment and subscribe. It's really interesting to know what you think of these reviews, how we do things, and also what you think of eToro. You can let us know in the comments below, or go to the Good Money Guide, fill in our awards survey, and tell us what you think of eToro based on customer service, pricing, market access, and their online trading platform. It gives us some really good colour of how you think eToro compares to the other trading platforms out there. So what do eToro do? Well, the things we're going to cover today in a live environment are CFD trading, investing in some stocks, cryptocurrency, and their copy trading features. What we'll do is we'll put little chapter marks in the description below so that if you get bored with our waffling, you can skip to each individual one without having to listen to things that you're not particularly interested in. First thing we're going to look at is copy trading. What is it? How do you do it? And in fact, should you do it? If you want to hear what the founder of eToro, Yoni, thinks about copy trading, we actually interviewed him on the subject a couple of years ago on how copy trading compares to traditional asset management. If you'd like to read the interview, go to the eToro review page on Good Money Guide, where you can also see what we think of eToro, how they compare to other brokers in terms of pricing and market access, as well as any product updates they have. We cover the news. If anybody's saying anything nice or nasty about them, we cover that. There's an FAQ section on there as well. What is copy trading? Well, it's basically a way of copying another trader's trades and portfolios so that you don't have to make decisions yourself. It's not a new thing. It's been around for decades. It used to be an institutional tool used on Strategy Runner by some institutional traders so that they can more easily allocate positions to their customers. Over the years, quite a few providers have offered it, but what has really been missing from the other providers is community. Which is odd, really, because, you know, the investing and trading community is one of the most vocal out there. People love to talk their own book. They love to talk about the positions they have. They love to talk about the positions that they want to put on. And it's really what makes a market. You know, opinion is what makes a market. Whether people are right or wrong, it's sentiment that drives the market. Obviously, there's, you know, fundamental valuations as well. But in the short term, it's buying and selling power and what people think a valuation of a company or an asset's going to be in the future that drives the price. To give you a few examples, you know, the LSE.co.uk, absolutely nothing to do with the London Stock Exchange. We must make that perfectly clear. Has a great share chat feature for small cap stocks. Reddit, for example, you know, everybody's talking rubbish about meme stocks for pump and dump schemes. Saxo Markets, the institutional and professional platform, they even tried it with tradingfloor.com. Didn't really catch on because the sort of more professional a trader you are, the more you keep things to your chest. But if you do want some really serious sort of fundamental and economical views, Seeking Alpha is one of the best user-generated research and analysis blogs out there. Probably don't want to hear me whittering on anymore, so let's take a look at how the eToro copy trading feature works. There's two types of copy trading, either into thematic funds, which are either designed by eToro themselves or a third party, or you can invest in popular investors, which are people like this. Now, to become a popular investor, you have to be vetted by eToro, because these guys can earn up to 2.5% of the money that's copying them, or AUC, assets under copy. So obviously it can be quite lucrative. So eToro has to put some parameters in place to ensure that they don't go rogue and lose everybody's money. Because, for example, if you look at this chap's portfolio, if we look at statistics, you can see he's done quite well in January here. He's done, fairly well in 2021. He's made 44%. He's done the similar thing in 2020. Didn't do quite so well before that, but as you can see from the amount of copiers he's had, he's been trading on his own pretty much before then, and then when he's applied to the copy trading platform, eToro's made him a popular investor, they've put him on the feed, and all of a sudden he's got lots of people following him. At the moment he's got between $1 million and $2 million following his portfolio and trades. So what eToro say is they don't endorse them, but they do vet them to make sure that they follow certain risk parameters and they don't go rogue and lose all the people's money that have very kindly decided to following them. It works like that in the real asset management world as well. If you buy a fund where the fund manager says he's going to invest in FTSE 100 highly liquid stocks, then that's what the fund manager has to do. He can't all of a sudden start buying unlisted techie stocks. That just wouldn't happen in the real world, especially for a regulated fund. But nevertheless, you can see his risk scores here. You can see his trading, his average profit, his average loss, what he likes to trade. You can see he's got stocks, currencies, ETFs, crypto, and indices. And you can see the breakdown of stocks as well, the ones that he frequently trades. If you do just want to copy his individual positions rather than his overall portfolio, you can have a look at his portfolio and you can see what percentage of his portfolio is invested in what. You can see the value of that against the portfolio, and you can see how well, or badly rather, he's been doing in certain positions. You can see, of course, a chart of his performance so far. I mean, to be fair, he's done very well. You can't argue with the you can't argue with the results there. But it's important to note that just because someone has done well in the past, it doesn't mean they're going to continue to do well in the future. You'll see that on any asset management website or service. Past performance is not a reflection of how it's going to do in the future. And it's very important that you realise that. Let's take a look at another chap. So this fella here, for example, he made 2% in January, 34% last year, 56% the year before that. Let's have a look, see what he's got in there. So he's got some PayPal, Goldman Sachs, Barclays, Netflix, Citi, Apple, Lloyds. So it looks a fairly equity-focused portfolio. You can see again that he's probably just applied to the copy trader program, and that's where all of his followers have come from. Again, this guy's got 1 million to 2 million following him. It's pretty simple to follow a portfolio. All you have to do is click the copy button and then decide how much you want to invest in this chap's fund. Why don't we just copy with $1,000 worth? You do get the option, a bit like a stop loss, to get out of his portfolio if it stops doing well, and you can either copy his existing trades or wait for new ones to put on. But we'll copy his new trades. So we've started copying this chap here, and if we go to our portfolio, we can see that we've got $1,000 worth of his portfolio. The other interesting thing, of course, is the thematic fund. So you can either invest in funds that sort of copy the gold market, one that copies the oil market, energy, banks, and so on. But one of the things I think is quite interesting is, and actually what eToro has been very good at over the years, is getting involved in new markets quickly. They were one of the first brokers to offer crypto. They were one of the first brokers to offer the cannabis stocks, and they've sort of jumped on the metaverse bandwagon as well. They have a thematic fund called Metaverse Life. It's just Metaverse Life, which contains stocks and cryptos that have exposure to the metaverse world. If you do want more information on the metaverse though, go to Good Money Guide, have a look at Jackson's article on how to invest in the metaverse. It goes through some of the pros, the cons, the risks, the rewards, and gives a good overview of the metaverse and how risky it can be to invest in it. But for example, this fund, you can see that it's nearly 70% stocks, 25% crypto. As with the popular investors, you can have a look at the portfolio, you can see what's in there. And if you can't figure out what popular investors or thematic funds you want to invest in, eToro do aggregated funds as well, so you can invest in a range of popular investors or a range of thematic funds. So should you copy trade? Well, it's up to you. Personally, I think there are better options out there for long-term investing. You know, buy a fund, buy an ETF, put it in an ISA, put it in a SIP. These are things that eToro don't offer. I think it's quite fun. I think it's quite a novel, innovative feature. I think it's good for sort of diving into people's portfolios, see what's going on in the world of investing and trading. But if you are looking for long-term capital growth, you're probably better off in an ISA account or a SIP. If you want to know how fund managers, regulated fund managers who look after hundreds of millions, billions of pounds, have a look at some of the interviews we have on the site. There's Keith Ashworth-Lord from the Buffettology Fund, there's Stephen Yu from Blue Whale, and we've got Jamie Ross from Henderson, and they all talk about their investment strategy, which is basically buy good stocks, do nothing. Unfortunately, investing is very boring, which actually brings us on to our next point. Is eToro an investing platform or a trading platform? So is eToro a trading platform or an investing platform? Well, in my mind, eToro has always been a trading platform. We reviewed them about 3 years ago, and I've known about them since inception, and everybody I've known that's used them has been a trader. But my mate Dan recently took over as UK MD, and before this review I spent an hour or so on Zoom with him explaining why eToro wants to be known as an investment account rather than a trading platform. So what we're going to do is we're going to take a look at the two products, CFD trading and investing, and get to the bottom of whether or not eToro are a trading platform or an investment account. So let's look at the two ways you can buy stocks and shares on eToro. We're going to look at buying a share as though it's an actual investment, and we're also going to look at CFD trading, which is, if you don't know what it is, probably shouldn't be doing it. So for the purposes of this, we're going to look at Ocado, one of the most heavily traded stocks on the London Stock Exchange. As with everything else copy trading, when you open up the product page, you get the social media feed, so you can see what eToro thinks about it, you can see what other traders think about it, you get the statistics, so you get all the fundamental data that you might need when generally making an investment decision. You get short, medium and long-term charts. You get the financial summary, so you can see how healthy the company is as a business. Obviously, it's quite light. It's not as comprehensive, for example, as the information you'd get on something like Stockopedia. But what also is quite interesting is this research page. A lot of brokers are trying to provide as much information as they can to investors and traders to help them make money. And actually, eToro does quite a good job here. The thing that's sort of front and center is analyst recommendations. Now, obviously, analyst recommendations, no matter how professional or institutional they are only as good as the person writing them and are only as good as the information that's available at the time. Quite often they're wrong, but they are a good sort of jumping off point, so you can have a look and see what the professionals think is going to happen. So for example, you can see here we've got a buy recommendation from Credit Suisse and Berenberg Bank, but a sell from Kepler. And of course, as we've said before, that's what makes a market. It's just a good bit of colour to give you an idea what might be going on with the stock. And then of course you've got the insider trading section down here, not of course insider trading, but inside trading rather, which refers to whether or not the directors are buying or selling the stock. So it's a fairly good indicator when directors are buying, because that's voluntary and it means that they're invested in the company. When directors sell, it's quite often freeing up a bit of money for a divorce or exercising some options that they've been given. But anyway, let's put a trade on and I'll show you how it works when you're buying Ocado as a investment. One of the things actually that Dan was quite keen to highlight in that eToro is an investment account rather than a trading platform is that they default the leverage to 1 time. So you do have the option of either buying eToro as a CFD or an investment. When you buy as an investment, eToro actually go into the market and buy the underlying shares. You don't own them, you don't get voting rights, you do get dividends, and you can't transfer them out. But as far as eToro is concerned, you do buy at the market price, and they do go into the market and hedge the position, so they're not taking the other side of you. You do have the option to trade on leverage, as I said. So if you're trading with a CFD, you get 5 times leverage. So if you want to buy $5,000 worth, you only have to put $1,000 down. I shall get into the dollar issue in a minute, but for now, let's just demonstrate buying $5,000 worth of Ocado. So what's actually quite interesting about eToro as well is that the way they enable you to buy fractional shares rather than having to buy the most full amount of shares. So if you want to buy $5,000 worth of Ocado, you can just buy $5,000 worth of Ocado rather than trying to figure out how many shares go into $5,000 worth. And Dan says, and eToro says, one of the reasons they're trying to do this is because they're trying to encourage that diversification. They want people, if you've only got $1,000 to invest, instead of buying one stock that costs $1,000 or not being able to buy some of the bigger American stocks because they cost more than $1,000, they want you to be able to buy 10 different stocks or $100 of 10 different stocks with $1,000 rather than having to put all of your risk capital into one investment. But here, for example, you can work it out quite easily. If you want to buy $5,000 worth, it shows quite clearly your exposure will be $5,000 there. You hit trade, and there you go. We have bought $5,000 worth of Ocado, and that sits in our account. There's no additional fees because it's a non-leveraged trade. However, if you want to trade Ocado as a CFD on on 5 times leverage, you can do. Of course, one of the advantages of trading CFDs is that you can profit when the market goes up and you can profit when the market goes down if you get the direction right. So in this example, what we'll do is we'll sell $5,000 worth of Ocado, and that will create a nice net flat. One of the reasons you might do this is if you're overall long Ocado and investment portfolio and you don't want to sell it because you don't want to realize capital gains, but you do want to protect yourself from the market coming off, you can sell a CFD to sort of hedge that position. So if we're trading with 5 times leverage, we want the same exposure. That's only $1,000. That gives us exposure of $1,000. We want to sell the market. There we go. We have sold. So as you can see here, we're now long an investment of $5,000 worth of Ocado, but we're short $5,000 worth on the CFD. So actually we're net flat. So it doesn't matter whether or not the market moves in our favor or against us, we're flat. Now, on to the US dollar issue. One of the things that really frustrates me about eToro is that everything is done in dollars. If you're in the UK, you can't have a sterling denominated account, which means as soon as you put money in, it's converted into dollars. Now, that's probably not going to be a massive deal if you're just tapping away with a few $100s and you're experimenting with the market. But if you're considering eToro as a serious place to keep your long-term investments, it is going to become an issue because you're going to be lumbered with unwanted currency exposure. Also, you can't invest in tax-efficient accounts like SIPs and ISAs. So really, as a trading platform, it's quite fun, it's quite innovative. I can see why they're doing it. There's access to a really broad range of markets. You can tap into things that you couldn't do before. I understand what eToro are trying to do to become a neo-broker and offer a global service. And the dollar, to be fair, is quite a good currency to do it in. But it's very frustrating as a customer. So it's more of an eToro problem rather than a customer problem. So if you are a customer and you're looking for a home for your long-term efficient investments, there are actually better places to put it than eToro. As a trading platform to tap around and have a little bit of fun with your fund money, I think it's quite a good option. It's quite good fun, but there, by definition, it's for your fund money. So it's a trading platform and therefore becomes less of an investment account. You can also invest in cryptocurrencies if you're into that sort of thing. Not really, in my mind, an investment product, more of an option. You pays your money, you takes your chance, but evidently there are lots of people that are interested in them. The other thing to consider, of course, is that when you start looking at indices, commodities and foreign exchange, it really sort of does revert back to form. For example, if you bring up the FTSE, you still get the social media feed, you still get the statistics and the charting, but when you go to trade, you're given max leverage straight away. So you are given 20 times leverage on indices, which is, I mean, it's not necessarily a bad thing. If you're trading CFDs, that's probably what you want. If you're tapping around as a trader, you do want max leverage so you can sort of diversify your trading and free up risk capital. But again, is it an investing platform or is it a trading platform? I mean, investment platforms do have trading facilities. Hargreaves Lansdown, for example, one of the biggest investment platforms in the UK, has HL Markets, which is in partnership with IG. So they do allow their customers to trade highly leveraged speculative products if they want to. It's not about whether or not you should or you shouldn't. We're not going to get into a debate as to whether or not trading is a good thing or a bad thing. It's just about whether is it an investing account or is it a trading platform? I think still very much a trading platform. They obviously do offer the facilities to invest in the long term if you want, although not in the traditional sense. There's no doubt in my mind that they're very innovative, and I do quite like the way they've really simplified everything if they're pushing people more towards investing rather than trading. So if you have used eToro, come back to the Good Money Guide, tell us what you think. As I said before, like, comment, subscribe. Either tell us what you think in the comments section or on the Good Money Guide survey. Thanks for watching.